So listen, I'm not gonna lie to you. My main investing tool, which is known as the Nova algorithm, is probably one of the most, and it actually is one of the most accurate investing systems across the entire crypto market. It has basically had over 100% hit rate across its entire existence. And today, I actually want to go over how I personally built mine and how you can go and build yourself your own algorithm, which basically has near to the amount of accuracy that mine has. So without further ado, let's just jump straight into it. All right, so how to build a proven to work real investing strategy, right? This is something I am very, very passionate about, just simply because I have built probably one of the most accurate investing algorithms across the entire crypto market. Matter of fact, I'll actually show it here. So here's the algorithm itself. It can literally be applied onto any cryptocurrency asset. It doesn't just work on Bitcoin. Also works on Ethereum, Solana. Also works on some of these quite high beta coins known as like Hyperliquid, Tau. Even works on these kind of high cap meme coins, Pepe. List goes on and on, right? But as you can see, it's overall giving you like fucking amazing entries, right? And we haven't had one trade where we've basically closed it for a loss. Every single trade we've taken, we have closed it at massive profit, right? As you can see here, even if you would have just bought down here and sold here, that would have been a 2x on Bitcoin alone, right? All you would have had to do is hold for 2 years. Congratulations, you have now made money in one of the most high liquidity asset classes in the world, which basically means if you had over 10 million fucking pounds, you could have made that into 20 mil, right? Which, if you would have done that with a random meme coin, I'm sorry to say this to you, you would have lost everything, right? But in Bitcoin, because it's such a high liquidity asset, it allows you to put tens of millions to hundreds of millions in this asset and get absolutely insane results. And my algorithm has been able to get you these types of results, right? So without further ado, let's actually go over how to actually build a real investment strategy just like mine, right? Firstly, before I get any more started, if you do want access to this algorithm, link is in the description below. If you don't really want to bother learning all the parts of like how to build an actual decent algorithm and all that, and if you just want to use this simple to use system, link is in the description below. But that's not the main point of this video today. I'll be going over how to actually build this for yourself. So without further ado, let's get into it. So firstly, if you actually want to win in the markets, you need to approach investing from a standpoint of quantitative investing, not qualitative investing. So you probably think to yourself, what the fuck did you just say, Dylan? Well, I'll go over it right now. Right? So what is a quantitative investor? A quantitative investor basically means you are basing your investing around numbers and maths, right? In the market, it is a very much mathematical driven market. You know, one of my mentors basically said, you know, if you want to go to any country and live there, let's say it's Russia, let's say it's China, wherever, right? If you want to go there and live there, you must learn the language of that certain country or industry that you're going into. In investing, it is literally the same. The question is, what is the language of investing? And the language of investing is mathematics, right? If you do not understand mathematics, you will not understand this industry, right? Which is why you must approach investing from the results that I have gotten. You must approach investing from a standpoint of quantitative investing, right? Now, what does this mean? Well, it means that you are approaching the market from a standpoint of finding data and maths, right? Overall, all this means is you build a system which involves mathematics and data points. If it pushes out a positive number, this means you buy. If it pushes out a negative number, it means you sell. If it pushes out 0, which basically means neutral, you do nothing, right? It's a very much more simplistic way of approaching the market, which will still be able to give you these types of insane results, right? And overall, the learning curve behind a quantitative investor is a lot more faster, right? Now, on the other side, what is a qualitative investor? Well, what a qualitative investor means you are looking for the quality of such data sources, news, etc. Now, you've probably heard the saying, well, it's always quality over quantity. Why is it in investing it's quantity over quality? And the reason behind it is because when you're investing via quality, you don't actually know what type of quality data is actually useful or not, right? Like think about it, right? We have obviously just had this this dump over here, right? This recent one over here. This dump was due to this war against Israel, Iran, and the US, right? Everyone was saying, oh, World War III is going to break out. Oh my God, it's so over, right? Now, if you would have approached this from a standpoint of an experienced investor, you would have actually seen, okay, this is a qualitative standpoint, which means this war isn't actually going to happen because this happens all the time. It happened with COVID, happened with 2008, right? This is the worst it's gonna get after the US dropped a bomb on Iran, right? I'm gonna buy here. This is the worst it's going to get, right? And that is coming from the standpoint if you are an experienced investor, right? But if you're new to the markets, you don't actually know that this is a good quality of information. You wouldn't know that. You would have thought, oh my God, World War III is going to break out. Oh, the markets are going to go so much lower, right? You don't know what is good quality data and what is shit quality data. It takes years. I literally mean it. It will take you over 10 years to learn what good quality data is and what shit quality data is, right? And as you can see, like as much as a bit more accurate it may be, you can actually see the much more faster route is just approaching the market from a quantitative standpoint, right? So that's the pros and cons, and that is basically how I built my algorithm, which comes from a standpoint of quantitative investing. Okay, so we've identified that we must approach investing from a standpoint of quantitative investing, right? So this means that we must now approach the market from data points, right? So what does this mean now? Well, it now means we have to go out and find data points that actually affect markets, right? Now, what I mean by this is stuff that actually impacts markets. Like, why does the market go up or down, right? And what most of you will actually go to first is these types of data points, which are such things as moving averages, RSIs, and technical analysis. Now, the main problem with these types of data points is they don't actually impact markets. These are just things that are reflective of price, right? So what do I mean by this? Well, if I actually turn off this, and if I actually turn on moving averages, this is just one that I just have. All a moving average is it takes the number of days, minutes, or just candles in the past, and it finds the average of where price could averagely go, right? Now, the main problem behind it is it's just reflective of what these past prices have done in the past, right? It doesn't actually impact markets, right? So if the market is doing this moving average very slowly will begin to rise up, right? But what type of buying zones, what type of selling zones do you have? Well, you don't really, right? It's just reflective of what price has done in the past. It doesn't actually impact markets, right? Same thing with RSI, right? RSI stands for the relative relative strength index, right? RSI. Over here. Same thing again, right? It just takes the average of what price has done in the past and it just says, you know, is it going up or is it going down? It doesn't actually tell you where price is going to go or not, right? So what you need to be looking for is data sets that actually impact markets. And these are such data points known as liquidations, funding rates, open interests. Hell, I'll give you a few more. Bid and order ask depth, liquidation maps, what else? Book and order ask depth, like things that actually impact markets, right? So I just want to go over exactly why these data sets are better than these, and you kind of get, and you start picturing the idea, right? So let's start with liquidations, right? So one little fact about the market is the market will move in the direction to fuck over the most amount of day traders as possible. Now, what do I mean by this? Well, when you open up a centralized exchange and once you start like day trading in crypto, it will give you an option of leverage, which will allow you to access between 1 to 100x leverage, right? And what this means is it's just a multiplier on top of your position. So let's say I have $100, right? And I want to put on a trade for 200, but I don't have $200. So what I can do is I can go on the futures exchange. I can apply 2x leverage, right? Which will give me the option to now put on a position worth $200, whilst my actual amount is only 100, right? Now you're probably thinking, okay, well, why would they do this? Because they're basically just giving me free money here. Well, the reason why they do this is because you are now entitled to a thing called a liquidation level, where, let's say, for example, price is doing this. So it's going up, right? And you're sidelined, you don't have a position on. You're thinking, fuck's sake, I've missed this move here. Well, it's now gone up a lot. Price surely can't go up anymore. So I'm going to put in a short. I'm going to bet against the market going down. So what I'll do is your entry point will be here. And let's say you have a stop loss. No, not stop loss. Let's say your liquidation level is like here, right? And you're like, haha, right, okay. Market's going to go down, right? But the thing is, right, you're not alone in this. Everyone else is thinking the exact same thing. Because this move, let's say this was like 50%, right? So you think to yourself, okay, right, market has to go down from here. Now, what will happen? Because a bunch of short interest is basically built up here, it will basically mean a bunch of liquidation levels would have built up here. So what does the market do? Comes up, takes you all out, takes all your money, you are now liquidated, and you've now lost everything. Think to yourself, fuck's sake, I've just been liquidated. Well, I now want to make back that money, but surely the market can't keep going up from here. Surely it has to go down from here. What ends up happening is you do the same thing. Put in a short here, liquidation's here. What does market do? Bang. Takes out your liquidation. Now you're there like, fuck's sake. Okay, right. The market has to now keep going up because it's been going up so much. Okay, fine. I'll go long, which now means you're betting on the market going up. So you put in a position here to long the market. Try and guess what the market does. Liquidation there, now you're broke, right? And this is just the harsh reality of the market. The market will move in the exact direction where most liquidations are met, right? And these are things that actually impact markets. These are the types of things that makes the market go up and go down, right? I'm not going to go into the rest of them because they're just fucking insanely complicated to understand. You can go and research them for yourself, but that's type of the data points that you want to be looking out for building your type of investing strategy, right? And yeah, that's basically overall how you build an investing strategy. Now, one thing I did forget to mention, right, is when you are building your own investing strategy, one of the best tools you can be using is this thing over here, Google Sheets. I literally mean it has changed my fucking investing life completely. right? I basically have, which one is it? This one over here, right? This is a very old beta version of how my investing system looks like. Obviously, this is not how it looks like anymore. I've completely changed all of this now. But this is basically how it used to look in the past, and literally all I would do is I would put the data points here, right? And I would basically score them from +1 to -1, put them all out, and whatever number it projected out here would tell me either to buy or to sell, right? Very simple concept, right? And this is how you build your investing strategy. Now, of course, if you think about taking all this information here, I mean, you're free to do it, but it's all outdated now. Like I don't use any of this stuff anymore. It's not very that useful to me, right? And again, you have to understand how to actually analyze this type of data, right? Because you may not actually know how to actually analyze this type of data. So yeah, that's basically how you build your own investing strategy. Again, if this all seemed a bit too complex for you, my Nova algorithm is in the link in the description below, where I'll basically go through crypto education, which goes over how my algorithm works, why it works, and why 99% of algorithms are scams. I also go over monthly market analysis, going over my thoughts of what the market will do, my current portfolio, and an access to my Discord where you will have one-to-one access with me, right? And that's basically it. So yeah, that's been how to actually build your own investing algorithm. If you found this video useful, then hit the like, hit the subscribe to keep on following me along this journey. And yeah, that's basically it, guys. I will see you all later on.